Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 28th of August. I'm Daniel Lam, your host for the podcast. One of the FAQs that I've been getting recently is whether this is an opportunity to be buying European banks, especially the French ones. Well, keen followers of our publications would know that we have had an opportunistically bullish idea on European banks, which we closed at the end of July. Now, we still like the fundamentals, but they're riding a little bit too high for our liking at that stage. Now, is it time to go in? Well, my answer is going to disappoint a few people, but it will be hard to tell. Yes, fundamentals is good, but right now we've got an event risk going on in France, and it is always difficult to estimate price drop that comes out of fear. Now, the key reason behind the price weakness is French Prime Minister Barrot's call for confidence vote in a bid to get ahead of a likely no confidence vote the opposition was preparing to table later in the year over Barrot's plans for a budget squeeze in 2026. Now, the Prime Minister's plan is to reduce debt that has risen to 114% of GDP and a deficit that was nearly double the EU's 3% limit last year. He proposed a €44 billion budget squeeze that would include scrapping 2 public holidays and freezing most public spending. However, that immediately backfired, with opposition parties saying that they would be voting him out. While they agree France's deficit and debt are too high, the opposition disagree with him on how to tackle the issues and refuse to back him. A vast majority of French people want Parliament dissolved for another vote. Separate surveys by various polls show the rate between 56% to 69%. Now, Macron did not discuss the option of dissolving Parliament. He appeared to be backing Barrot's strategy. However, whether there will be a new Prime Minister or snap elections, it would mean a prolonged period of uncertainties. Looking at the Euro Stoxx 50 price index, we see resistance around the 5,500 level a number of times this year and unable to be breaking on the upside. Now, 5,200, which is about 4% from the current level, is the next key level of support. So given the lingering uncertainties and from recent past episodes of French politics, one should be patient and wait for the index to correct near the support level, and then looking to go in tranches. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.